We move to the next panel discussion, which will be perhaps the last panel discussion of this event, but very important topic again, uh, how technology can be a panacea for NBFC challenges. And for that, I would like to invite digital transformation leaders from the NBFC sector. Uh, Rajneesh, they will be playing the role of moderator for this session. Let me invite Mr. Nand Kishore Purohit, CDO IIFL, Rajaram Manian B, CRO Adani Capital, Mr. Kapil Jain, co-founder and CBO Cryptomintr, and Vishal Chopra, CEO and co-founder of WeRize. Over to you, Rajneesh.
So the first thing when we are looking at tech as a panacea for the challenges in NBFC, the first thing is what I would like to focus on, how AI and analytics is being leveraged, especially for NBFCs to prevent NPAs and other kind of financial frauds. How can technology, especially the artificial intelligence and analytics, those can help in preventing frauds? And
Shall I answer, Rajneesh?
sure, please.
Okay. So I'll take it a little back. Okay. We all are used to looking at things in isolation. Okay. So the question is how analytics can be leveraged to prevent fraud in analytics, to prevent fraud in NBFC. I don't look at using analytics to prevent fraud. What we do as a firm is we use analytics to give loan to the right people. If you give loan to the right people, okay, if you use all your data analytics, if you use all your customer insights while deciding whom to give, what to give, how much to give, then your task of leveraging the same analytics to reduce fraud goes down. I'm not saying we don't use it. So what we have done at IIFL is we have primarily two large loan portfolios. One is gold loan, another is housing finance. And we also have a smaller portfolio of unsecured loans. So we use analytics at the time of customer acquisition and onboarding. As a NBFC, I don't inherently has lot of data about the customer who is seeking credit from me. So I rely upon lot of third-party players with various integrations with third-party players to know more about customers and create a persona of customer who in turn matches with my existing customer base of 4 million. So I have 4 to 6 million customers, out of which from an analytics language I have true positives and true negatives. Positives are the people who are paying me as and when required. Negatives are the people who have defaulted once, twice or thrice. And those personas I match with the this. So this way I am able to give loan to the right people, as well as I am also able to leverage analytics to prevent giving credit to somebody or to use this to get more money from them.
Exactly. Yes, please join.
Please.
Sure. So I'll come to you next on basically again focusing on if I may broaden the question or rephrase it slightly, how technology is being leveraged specifically from an NBFC perspective to prevent frauds. Because that is one, NPAs and frauds are one large concern and headache of most of the NBFCs. So how can technology help?
See, when we talk about the entire journey of a customer, say from sourcing to sanctioning, to disbursement, to monitoring, and then finally, you get your money back. So this entire journey, when we look up to, and as rightly mentioned by, the panelist here, that we do not give loans to such people who may potentially default. but that doesn't solve the problem.
Right.
NBFC actually complement banks in reaching out to the people who are not bankable as of now. They complement the bank in terms of demographics and also geographies. So I come from Assam, and there are various places where bank don't want to go. They don't want to give loans to the farmer who are doing some kind of horticulture, say in some part of zero in Arunachal Pradesh. So there comes the role of NBFCs, and we can't say to these people. So what could be done? So there are set guidelines issued by RBI and Department of say Finance Studies, DFS, wherein they clearly let down the various signals which are there which you need to report. But unfortunately, with the advent of technology, NBFC is picking up. So when I talk about NBFCs, so whatever have happened in say 1990s, since 2016, say after the demonetization, a lot of fund got infused into NBFCs. And we have seen things happening in 2019. And then this pandemic, 2020, which hit. So right now, when we look into the entire customer expectation, wherein customer want to get the sanction in say 10 minutes. So how would you do that, right? So you have to have stringent AI, machine learning tools, which will help you to understand the behavior of the consumer. At what time he goes to work, whether he uses Uber or he uses, Zomato for food, or what are his patterns of payments, You can't always rely upon, say, CIBIL score. Sometimes people don't have CIBIL score. So when we talk about the loans worth, say, $10 or maybe $20, 1,000 rupees, you can't put that many resources on ground to take care of it. But when we multiply it with millions, so globally, if we look into scenarios like in China, there is something called Alipay. So Alipay, they say to add, say, 10,000 customers, they just need 2 machines, right? And we have seen what happened with Capital One in the US, right? So there are various case studies, and NBFCs need to get in pace with Paytms of India, but at the same time, just getting customer, just getting growth is not enough. We have to have real-time monitoring tools to understand the behavior of the customer, and that's how we can actually go beyond this problem of NPAs in smaller scale, but in the large cases, the auditing, the real-time auditing. So one of the exposures which I had with NPA is with a company called Ruchi Soya, which is now owned by Baba Ramdev. So I used to work as a chief of staff or the managing director of the company, and we realized that this pari passu charges in the banking plays a very, very important role. So I come from crypto background. I am an advocate of, say, blockchain technology. So when we talk about securities, when we talk about collaterals, other than AI, ML, natural NLP, whatever, blockchain is going to play a very bigger role, especially to do with the securities. And I'll add a few more things in the next question.
Sure. May I come to you? Primarily the point was talking about usage of technology in reducing the frauds and how effectively analytics has been leveraged there. Briefly, if you can.
Sure. So I think I'll start with the introduction on what we do. We are not obviously a well-known company, as well-known companies as the other panelists. So we are called WeRize. We are a 3-year-old company. We are well funded by top-tier venture capital and private equity. Prior to this, I was the chief business officer of Lending Card prior to starting this company. So what we do is, and I will answer your question subsequently. So what we are building is the largest financial services brand for the India 2, which is the middle class people, lower middle class people living in the smaller cities. We are not going after the India 1, which is the over leverage market, which everybody else is going after, both banks and fintechs. So our core thesis is to solve for that segment. Now, you can't really do a pure digital model when you either lend to them or create any financial services for them. So we create financial services for India too, not microfinance. So somewhere between the India one and the microfinance market, the middle class people living in smaller cities. Now, for these people, we need a phygital model. Now, the problem with the phygital model is where the frauds like really start to come in, right? Like if you have your own, so we work with LIC agents and these micro agents and all that in smaller cities. So while we create our own product, we do have our own NBFC, we do balance sheet and non like co-lending kind of business, 250 crores of AUM as we speak. And we are into insurance, and we are launching a neo bank and some of the other things relevant for that market, which is primarily a PSU customer, not the HDFC Bajaj customer. Now, for that customer segment, you can't really reach digitally. While you can reach digitally, the CAC and all does not work. So we have a phygital model. Now, with phygital model, we work with LIC agents and other micro loan connectors, etc., across 1,000+ cities in India. The biggest problem that happens in that kind of model is the fraud, that somebody can just take the loan on their own behalf, right? So how we have solved it with technology is that we have two apps. One is a partner app, which is the freelancer app, and then there is a customer app also. So while the freelancer can source the business through his or her own app, which is the WeRize partner app, the customer has to give the consent of CIBIL, give the OKYC, everything has to happen on the customer app. Even though it is assisted, the freelancer may help the customer, but the customer has to give the OTP. The customer OTP has to come on the, and all the analytics, we read the SMS, and obviously we take the bank statements and all those, right? So we can build all the layers. So especially like while most of the folks focus on solving the frauds and all those for the Indian market, for us, the challenges are different.
Okay.
For us, this ability to have two different apps, where the customer gives the consent, the customer does the KYC, and we are able to pull the data and do all the analytics on the customer's phone, right? That's where we are able to.
So you're talking about a customer-facing app
As well as the
as well as
partner-facing app, both
in
sides.
isolation.
Yeah.
That's fine.
Yeah.
So Nand Kishore, I'll come to you next. My next question, he touched upon the co-lending aspect, and say end of the day, NBFCs need to work with the banks, the institutions. So that collaboration between banks and NBFCs and the role technology is playing in enhancing a better collaboration business model. What is the role of technology there?
So, any collaboration becomes successful if technology is leveraged to the core. Okay? As far as NBFC and bank goes, people have looked at this relationship as a principal and user of funds. So bank is a principal of fund,
Exactly.
and NBFC is the user of fund. I see it far differently. Okay? The bankers with which we co-lend in some of our target segment, you would not believe when we did data mining, our 37% of the customers were from the same bank.
Oh,
Okay?
So that helps.
So that's when we went to the bank and we said that no competition to it, because your money is being used and you are getting more out of your money with lesser risk because the risk is taken by me. Why don't you help me do a better lending, better credit appraisal, wherein I can leverage your data, I can leverage your insights to choose how better I can give them. One. Second, every bank, the most important thing is their CASA, because until and unless they get money, they can't lend. So what we told them that we will do a two-way integration. One is, I lend to your customer, you provide me the best possible information about your customers, so that even if the customer, I'll tell you a classical case where customers, those 34% customers, 17% customers, as per the bank credit appraisal, and when we mapped bank data on our credit appraisal, the loan eligibility became 1.5 times. Okay? Wherein I had a little information about the customer has a 10-year history with the bank, and I was able to, with the same appraisal process, was able to offer him 1.5 times of the loan. So look at the revenues where they are going. Second, we also created a model wherein customer takes loan in their same bank account. So for the bank, the money is moving from one pocket to another, better credit appraisal, more business and more control both for bank and this, and by doing so, we negotiated the rate with which the bank was lending. Thank you.
Thank you. Kapil, in terms of the collaboration between banks and NBFCs, how can technology play a better role in enhancing that collaboration, your experience?
There are two aspects to it. First is, let's talk about the Bank of Banks, the Reserve Bank of India. So, in past year or so, the rules and regulation and the compliances which are required by NBFCs have been made stringent. And that has been done to avoid such kind of lapses which were happening in terms of the relationships which NBFCs were having with the bank. Now, one way of raising funds for NBFCs is obviously, they go to banks and they ask for deposits. But the other way are that, they also go to other mutual funds, they seek investment in terms of, maybe equities at times. So the idea is that, the systems, the compliances, the sharing of information with the bank is at a very nascent stage, which is rightly mentioned by, the co-panelist here. So even if, there are, say, SaaS softwares or maybe, the tools wherein we can access these kind of information, the idea is to use that data for serving the purpose in a very meaningful manner, rather than having those data in bits and pieces everywhere,
Okay.
So it's more about sharing the information and making the decision by validation of the data in terms of the usage of these technical tools.
Okay. Yes.
I think this whole trend that has started in India on NBFC to bank or like fintech, either NBFC or otherwise, it's the right thing to do, right? Like everybody brings their own something to the ecosystem, right? In fact, even with fintechs, fintech to large NBFC is a big business. So I think I don't know if you know. So I met folks in your office on Monday, and we are starting relationship, co-lending relationship with you. Right? We are a relatively smaller company, and like there are much larger NBFCs like you or Aditya Birla, right? So there are people that have the scale that can borrow at a cheaper cost, and then there are new age players that are like us who may have either advantage in distribution or underwriting or fraud management or anything else, right? And it's the great symbiotic relationship that is starting. And in last couple of years, so when I was the CBO of Lending Cart, this did not even exist. This whole co-lending or this partnership did not exist. Like we used to do 100% balance sheet on lending. Like we would borrow from the banks, and it was a painful process. But now, even though I have left Lending Cart a couple of years ago, like they have completely moved to co-lending with other larger NBFCs or banks. So that's the right model, because on one side you have the money, and on the other side you have the nimbleness, right? And I'm sure like even there are large scale nimble NBFCs like you who are working with PSUs who may not have the chops or the technology to actually serve the customers. So yeah, it's the right thing to happen, and both sides are learning from each other and overall contributing to the nation and the ecosystem.
What is the, in terms of, especially when we're talking about NBFC environment, in terms of further regulations, especially where once the co-lending and these things happens, when there is a joint business model with the banks also, and we know how banks and other financial services is anyway highly regulated. So do you see further scopes for regulations regulating the NBFC sector, and to compliance with those regulations, what can increasingly the role technology can play in further compliance?
What all I say is truly personal. No, that's why the disclaimer. We need to look at regulation from a very different perspective. till now, across industries, we have looked at regulation when it comes as a watchdog, as a constraint. I look at regulation from a very different perspective. Because people who are creating regulation, they are far more wiser than us. They are far more visionary than us. So what I see and what is the need for regulation in NBFC is primarily how regulation can create a mechanism where the interest of the right people as borrowers is protected versus some wrongdoings of NBFCs to support few wrong individuals. If you see why NBFCs are not well regarded versus banks in this country or globally, he said Capital One, etc., 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 they are more nimble, they are more aggressive, they have adopted technology far more faster, their margins are far less than the banks. But because of lack of customer-centric regulations, okay, the NBFC as an industry is still not a choice of borrowing by tier A borrowers. Okay, I draw a parallel to the securities market in India. Okay, because we have one subsidiary which is into, two subsidiaries which is into securities market, and look at what SEBI has done. What SEBI has done over a period of years has created a regulation which entails, which entrusts faith in anybody or everybody who is entering the market. So, to me, regulator has to look from that perspective and create regulation which may not be taken very well by the industry because nobody wants to be regulated and ring-fenced, but in the long run, it helps in scaling the business. And you see in the investment market what has happened in last 2 years. When everybody was crying because of the COVID, that is one market which has grown equivalent to what they have not grown in last 20 years.
Exactly.
So that is where my take is.
So basically, you would recommend a regulatory body like a SEBI or in insurance we have an IRDA, so things like. Exactly. Yes, Kapil.
See, these regulators, for example, RBI is one of the most renowned regulators in the world. You took name of SEBI, IRDA. You know, these are mainly to protect the interest of the stakeholders, in particular, the masses. So what we have seen post demonetization is that there was a huge inflow of funds in these NBFCs happening. And where was those amount going, was it going to, say, priority sector lending, or it was going to infrastructure, or it was going to, co-lending, or maybe, to the people who want, say, personal finance, was it happening via collateral? So all this data which is coming up are very crucial in terms of the user behavior. Now, as a regulator, RBI or maybe, these regulators have access to these information. The idea is to make sure that we go hand in hand, or maybe, we go with the flow, what's happening globally. We have various case studies from China, from European countries, from Middle East, how the financial sector has evolved in time. So when we say that, everything should be regulated, we agree, we have to agree. But at the same time, we also need to, ensure that, the things which are happening with the help of technology need to be also considered. Being from a blockchain background, if I talk to any of the banks or NBFCs, they will not touch us. So we are untouchables in terms of UPI integration, payment gateway integration, but then we have left with no choice than to go to Estonia or maybe to Dubai or some state in USA. So the idea is that a regulator for NBFCs should also have access to these information, and it should be towards making the system more robust. And implementation of more technologies should be promoted, especially of the blockchain technology.
Yes.
So I have a slightly different view, right? I have lived in US for many years, and last 10 years I've been in India also. I think RBI is one of the most progressive regulator in the world, right? Now, obviously in the industry, people would want free hand, right, which gives them flexibility to maybe make more money or something, but sometimes at the expense of customers. But for the right, for the industry to grow in the right manner, regulations are very important. And we have seen when regulations are not there. So I come from digital background and like fintechs and all, right? Like we saw that there were no clear regulations between fintech and NBFC or fintech or bank, mostly fintech and NBFC, this whole FLDG, right? And then a lot of these, foreign players came in and they started doing these payday loans and charging like crazy 1,000% interest rate and doing all the nonsense collection practice and all, right? And it hurt customers, it hurts the industry. So if the regulations, the right regulations are not there, then there are some bad players that will come who will game those regulations,
True.
right? That lack of regulation and bring the entire industry down. And that's where I think, and RBI is kind of realizing this, that fintech is too important now. And they're trying to bring the right regulations, maybe a little late. Maybe this should have happened a couple of years ago. The regulatory arbitrage for some of these companies that came from abroad and they started doing this payday, stuff should not ideally have been there. But thankfully, RBI has done a lot of cleanup there. And now people who are willing to build the right business around the right regulation, that itself is a moat in itself.
Okay.
Right? So what the nation needs and what is the people that are willing to play cleanly and do the, put their blood and sweat in building the right business and operation and do all the hard work where they can balance the customer interest as well as their own interest. It's very easy to like cheat the customer and make extra bucks, right?
Exactly.
So, yeah.
Okay, so the last round will conclude and we'll start with Nand. Kishore, 1 minute to each of you. What, from the technology perspective, do you foresee would be the prerogative of NBFC in the next 12 to 18 months, NBFC? Technology-wise, the priority action which NBFCs would take, what do you foresee?
The most important and priority action which we should take is having a technology which can read data fast and which can analyze data to the best of ability to deliver customer experience. So in NBFC, it's all about data.
Thanks.
In my view, the problem here is with the accessibility. And I would like to see fintech or the technology playing a role wherein, NBFCs and the banks are so much equipped that they can actually give sanction or loans maybe in less than 30 seconds in next, say, 3 to 5 years.
So that's quite ambitious.
Yeah, I think that's where we are moving towards, right? Like account aggregator is the core thing, right? Like that's like a dream come true for all of us, right? Like UPI was essentially the thing, like for the bringing the cost of capital, cost of operations down, bringing the friction down. Like this account aggregator is literally a dream come true for the entire fintech and the banking ecosystem. So it has been in works for some time. I think it's slowly starting to get its feet on the ground. But I think next year onwards, you will see a real impact happening. So UPI also took some time, right? Like first 1-2 years, it was slightly on the slower side. Right now, the banks are adopting the whole account aggregator stack. Once SBI and some of these bigger ones really go live, it's going to be a big game changer for all of us. We'll increase competition, but again, then the point is about like who can do it better, right? Who can distribute better, who can underwrite better, who can collect better.
Okay, thanks. Yes, one question. Sure, definitely.
Good afternoon, Rajesh Khandelwalia. I want to talk to Mr. Jain. Like right now you said the upcoming thing right now is blockchain, which is coming up on a very big scale and it will be beneficial for all the industry to get the full data. But in regards to cryptocurrency, the way it's considered as a gambling. So what do you say about the same?
So when I sit here, I represent blockchain as a technology. When we talk about, say, crypto, right? Crypto is just one of the use cases of blockchain technology, right? It could be a medium wherein you reward the players who are participating in this blockchain layer, but standalone crypto doesn't have any value, right?
Any?
Standalone crypto, like I can mint or I can give you crypto, say in next 2 days, your own crypto, whatever your name /crypto. That doesn't make any sense. But as a technology, not only people sitting here, but globally, people understand that how this decentralization ecosystem is going to change the internet forever, right? So when we talk about blockchain, we don't talk about crypto assets, right? So when we talk about, say, NFTs, now, for example, recently, Ethereum founder, Vitalik Buterin, launched SBT, which is soul-bound tokens, which are just having those wallets where you can only store your personal information. So this is, again, one of the use cases. In BFSI, more use cases will evolve with time, but right now, international remittances is one of the use cases which we are working on. Trade finance is one of the cases. Then security, collateralization, putting your property on blockchain. These are the use cases. Rather, we focus on crypto as an asset. We should focus blockchain as a technology which is going to change the internet forever in next decade or 2 decades or so.
So you consider it as a gambling?
I have no comments.
I'm waiting
to
for
say
that answer.
No, I'll give you that answer. 25 years back, either of us would have asked our parents that I want to buy a share, the answer would have been same. Satta Bazaar Jua hai. So what he's trying to say is that उस समय भी सट्टा बाजार जुआ इसलिए था क्योंकि पैसा कमाने का वो एक जरिया था जो आपको, मेरे को और हमारे जैसे लोगों को समझ में नहीं आता था. Okay? Similarly, if you look at crypto, so whatever he's saying didn't excite you, because whatever he's saying doesn't create a dopamine in you or me. So whenever anything comes new, if it is creating a dopamine in us, we try to embrace it. Okay? He's discussed about lot of valid use cases of blockchain in terms of properties. Okay? Look at the cases of property fraud which are happening globally. किसी की property किसी को बेच दी, I still don't know who is the right owner of the property. That is a blockchain use case. Personal documents, we all know DigiLocker. Have we ever thought that we will keep our certificates or everything in a place called as DigiLocker? I still remember that I used to have my IIT degree laminated. I don't know when I lost it during COVID and still unable to get it. And it's still not available on DigiLocker. So, crypto is something which is a use case of blockchain which had gained prominence. I'm not here to say whether crypto is right or wrong. We should look at blockchain in terms of its usability for the mankind. And that is precisely the reason, as a government of this country, we have said that we understand that digital currency is to come. Okay? In this form or that form, nobody knows. It's too new. So I hope I've answered your question on gambling. Okay, until we know, even if it is valid, it is gambling for us. Otherwise, we should look at blockchain in a larger sense.
Just a word of caution. He mentioned about dopamine. Too much dopamine is injurious to health.
That's what crypto is giving.
Okay. So be aware, whenever you invest, you should know what you are doing. We are not here to give you any advice on investments, right? We are here to bolster this phenomenon called blockchain technology, which is the future.
I'll discuss with you offline,
No
but
problem.
apart from that, I just want to come on the same line. Right now you said about assets being purchased by other person. Right now, the credibility of any person is considered on the basis of CRISIL. And approximately 6 to 8 months before, there had been a huge scam which came across that many people's details were used by other people to take away the loan, and whereby suddenly the person got a love letter that you have defaulted in so-and-so loan, and whereby the person was shocked that I didn't take that loan. And later on, even there had been some cases whereby the people had a fight with the credit card company provider, and whereby the credit card company was adamant that no, you have to pay this, otherwise your CRISIL rating will be troubled up. Now, what about those people who get troubled up in regards to CRISIL rating, but in actual,
It is a
they are strong?
It is a classic case of identity theft. Okay. We all talk about good things of technology. Okay. I wanted to answer when he asked that what technology would do to prevent the NPAs, or there was another question. Actually, this is all created by technology, if you ask me. Loans were there in the old age also, but in the old age, NPAs were not there because I knew to whom I am giving the loan. I knew his 7th generation to whom I am giving new. So with the advent of technology, if I reach a place in HDFC Bank, we had given a personal loan to somebody in 2 minutes. He wanted 30 seconds. A day will come, we will do it in 30 seconds, also 3 seconds. Okay? Technology helps us to generate scale. Technology helps us to reach where we want to. But everything which has a positive has a negative to it. There cannot be anything which is 100% foolproof. Okay? So with the advent of technology, we gain something, we lose something, we still work to remove those areas of deficiencies and work towards it. So to me, it's a vicious circle. If it is not there, all the digital people and technology people or the cyber security people sitting over here would not have jobs.
Thank you.